This time around, it is clear that the fundamentals in terms of public finances, competitiveness of the economies, the governance structures, the structural issues which have been addressed have created a solid rock on which to base the growth. Two risks which are big elephants: climate change, see what is happening in Benin. Second, infrastructure, in particular energy. I think that if we can mitigate and adapt for climate change, if we can invest more in infrastructure, I'm persuaded that this time around is not a false dawn.
All right, infrastructure obviously is a huge issue, and we know that by estimations, a lack of infrastructure has added the cost of doing business by 40%. Governments have made verbal pledges to increase spending on infrastructure, big economies like Nigeria launching infrastructure bonds. But beyond pledges, there isn't any tangible action we're seeing in terms of financing infrastructure or raising financing for infrastructure.
In terms of investments, if I look at what we do in the bank ourselves, put in $60 billion, and we're able to leverage maybe another $3-4 for energy, I think I can say that the momentum is there.
Right.
From South Africa to Egypt to Nigeria, and even the smaller countries. To give an example, in Cape Verde, a very small country in the Atlantic, where the water available is from desalination. And as you know, desalination takes a lot of energy. They have been doing that using fuel oil and diesel.
Right.
And so we have done a wind project there, $24 million. And we're able to provide the country with cheap electricity, which I think will help them along the way.
Okay, you talk about energy, and I mean, I can draw numerous examples. For instance, we know that this is the real issue and impediment to growth in Africa. Eskom in South Africa can't guarantee energy supply beyond 2013. We've got energy security problems in Nigeria. We've got it in Kenya. And people are saying privatize the utilities, for instance. That's the one element. The other is move into alternatives and renewable energy sources, but then widen the space for independent power producers. Independent power producers say capital is our biggest impediment, and now you start to have a disconnect. We all know the problem, but again, we can't find the financing, and those who are able to come in as private partners don't see the capital incentive of investing so much money when the tariffs are so low. It just seems to be a big quagmire.
There are several issues there which are interlinked. What independent power producers tell me is that they are worried about the financial standing of the off-takers. They are worried about the regulation. They are worried about tariff policy, that kind of stuff. And so when we go into a country to try to provide support to them, we go upstream and look at the quality of the regulation and we work with them to improve the regulation. We look at tariff policy. We look at the financial standing of the off-taker. We look at the quality, the level of technical losses or commercial losses, because there's no point producing electricity if 40% of it will be lost through poor billing practices or because of dilapidated transmission systems. So we look at the whole range of issues.
Let's go back to the topic at hand, setting the agenda for Africa's growth. We'll be going into a G20 summit in the next few weeks, and already lots of questions around currency, stability, interest rate cycles, monetary policy. Do you think that richer countries have a grip on their recovery programs and what's needed for growth? Because as you know, America, for instance, is the largest consumer nation. It's the largest contributor to global growth. If they can't get it organized, it's having a repercussion for everybody else. So just your perspective on what could happen at G20.
We began with the financial crisis, then which has become a crisis of sovereign debt, which, no, first of all, financial crisis, banking crisis, sovereign debt, and of course now unemployment. And so every country is looking after its own. That is most natural. But I think what the G20 serves is to say, look, either we're in together, we shall all be losers, whether it is currency or it is trade. And I think the summit in Seoul, in Korea, will be quite important. It is the first one to take place in an emerging country, which has a stake in the stability of the world economy. So I'm confident, or I'm confident. What I'm not confident about is whether the issues of development will be seriously tackled. I know the Korean host is keen to put development issues on the agenda, not as an afterthought, not as a footnote.
Just continuing on this tack, I mean, we're seeing a low interest rate environment in Western economies, and then we're seeing a situation where there are foreign exchange interventions in emerging market economies because everybody's trying to boost their export competitiveness.
Yes.
And it's led to all these terms such as the currency wars, for instance, and the implications for the emerging market economies. And there are fears that as money leaves Europe and the United States for emerging markets looking for greater yield, it's going to create asset bubbles. Where do you think Africa fits within this continuum?
There are some currency disputes, but which actually behind hide commercial disputes. Because a currency dispute is a precursor for trade disputes. Now, at the moment, what people are doing, some have imposed capital controls on hot money, others are issuing threats of different type of controls. I again expect that at the G20 in Korea, they'll be able to understand that we have to work together. I see also that the French G20 presidency will put on the table this big issue of a new monetary financial architecture. We'll have to wait and see what that architecture looks like. Now, for us in Africa, two issues are important on currencies. You know, we are major exporters of commodities. So at the end of the day for us, usually we look at, is this rise in the currency bringing in more dollars for us? If you take a dollar-denominated commodity like oil, when currency goes up, it's good for us. It goes down, it's not good for us. So that is the nuance for commodity producers. Number two, this is the issue. For far too long, I think the dynamic of economic relationship between Africa and the rest of the world has been north-south. Former colonial powers, former colonized. Now it is shifting to other developing countries. Brazil, India, Malaysia, and China. Now that will change the dynamics. And we'll have to wait and see how it develops.
All right, just talking about trade, one of the issues that's come out of this conference here at the ADB is the need for Africa to boost its competitive advantage in trade. Beneficiation, don't just be an exporter of raw materials, but also find new captive markets. We know that with the growing importance of emerging markets, trade with BRIC countries has increased by 30%. But globally, the aggregated contribution of Africa to global trade is less than 2%. So we're making improvements, but it's hardly a dent on what's needed to really change the face of the global trade regime.
It is not lack of competitive firms or competitive farms. It is lack of competitive systems, which incorporates many things. That is what we have to address on this continent. And I think I'll be the first to say that although as a bank we are promoters of regional integration, progress is much slower than it can be. And that will have the two effects. One, to ensure that the systems upgrade quickly. Number two, to ensure that the domestic potential of Africa also comes up.
The role of development finance institutions, I mean, in a country like South Africa, heavy emphasis on the IDC, for instance, to play its role in supporting SMEs and in industrializing and modernizing the economy. What's the role of the FDB in this era of growth?
I think we made a big mistake in the 80s. In fact, two big mistakes which we're revisiting. One of them was the assumption that privatization immediately provides a solution. Now, whether it is rails, whether it is energy, we have to look at what is it that works. Which part of it can we privatize, which can stay in public hands, or shall we privatize it all? So the issue was not the owner of the assets, it was the way the assets are utilized for the advantage of the economy. Now, this has relevance for the development banks and development institutions like the one you mentioned. Many of them in the 80s were badly governed. They were political banks, they were political institutions, giving political loans, and they went under, they undermined public finances. And so the model then was privatize them or liquidate them. But you know, I am a strong believer in the role of the state where there is a clear case of market failure, where there is a strategic need to drive a strategy. You know, this is what Korea did. Malaysia, China, India. State institutions like the China Development Bank have played a major role in infrastructure inside China. In fact, the China Development Bank began basically to resolve the infrastructure issues inside the country.
Food security is another issue that's coming to the fore, human development questions. It's been mentioned today that there's the Africa Green Fund really targeting some of these issues around food security, poverty alleviation. Can you tell us more?
The African Green Fund, which we are initiating, is in the context of the Copenhagen 15. That is to say that this continent has suffered the effects of climate change, and therefore we are looking to set up a vehicle in which we can attract finance from public and private sources to finance adaptation and mitigation. Now, the fund is in infancy. I hope that the organs which are competent will adopt it and will get support.
All right, and then just finally, I mean, just in terms of coalescing the interest of business, government around this also, this broader climate change agenda, lots of talk about things like carbon credits, for instance. You are allowed to pollute one place if you're going to plant somewhere else, you know. It doesn't seem to, as a concept, it takes off, but it doesn't seem to have taken off as a viable financial mechanism. How would the bank play a role in terms of just getting everybody to rally behind carbon credits and Africa playing its role, because apparently we're the most susceptible continent?
There are two problems. Many of the provisions under the Kyoto Protocol, which put in place this CDM and cap and trade and the rest of it, has not worked in favor of Africa. In fact, one of the improvements we're looking for in the success of the Kyoto Protocol is to have mechanisms which we can actually access. Africa has accessed very little of these mechanisms. And that was because of the design of the mechanisms, which were mainly meant to address issues of mitigation. Yet for us, the biggest issue is adaptation, adapting our agriculture, infrastructure, and so on. Now, I am serving in a group set up by the Secretary General of the UN with the Prime Minister of Ethiopia, Mr. Trevor Manuel, to try and raise the $100 billion needed to finance adaptation and climate change if Cancun is to succeed. What we have found is that raising this money is a challenge, but it is possible, $100 billion per year. But we have found that there is one condition, and that condition is that pollution must have a price. We need a carbon price.